The latest firestorm to engulf Wall Street, which Malcolm Turnbull was just referring to, which began to burn at the weekend, has sent shockwaves again around the world, prompting a big slump on markets, including some wobbles here in Australia. Global investment bank Lehman Brothers is just the latest titan of Wall Street to collapse. On the same day, its rival Merrill Lynch scrambled to save itself by selling itself off at fire sale prices to the Bank of America. It also emerged that America's biggest insurer, AIG, was in trouble. And it all follows global financial write-offs in the hundreds of billions of dollars over the past 6 months. Such is the scale of the financial carnage. Analysts say the global economy has now entered a dangerous new phase, and no one really knows where the fallout will end. Deborah Cornwall reports.
It's very hard to imagine that a place like Lehman would come down like this.
I never believed when I first heard about subprime lending and the problems there 18 months ago that it'd end up taking out half of Wall Street. But it has, and it's here, and no one can believe it, but it's here.
We had 5 dominant investment banks in Wall Street that were the awe of the world, and now 3 of them have disappeared.
As 2 more titans of Wall Street came crashing to earth yesterday, the fallout reverberated around the globe. In one day, 2 of the world's biggest investment banks fell over. Lehman Brothers going into bankruptcy, while Merrill Lynch scrambled into a fire sale merger with the Bank of America.
This is a once-in-a-half-century, probably once-in-a-century type of event.
Is it the worst you've ever seen in your career?
Oh, by far. There's no question that this is in the process of outstripping anything I've seen, and it still is not resolved, and it still has a way to go.
We're not going to move through this in a straight line. There are going to be some real rough spots along the road.
The scale of the losses is so great, the Dow Jones plummeted 500 points overnight, the largest slide since 9/11. Global economist and Commonwealth Bank advisor David Hale says the US government may have to set up a fund to underpin the entire US financial system.
It happened in the 1930s, and the reality is it could happen again in 2009. The scale of this crisis has no precedent since the Second World War. We are now in uncharted territory we've never experienced before, and therefore none of the rules that we've known for the last 20 or 30 years are still relevant.
Markets tonight are now stilled for yet another wipeout, with the largest insurer in the world, AIG, on the brink of collapse.
Their share price has collapsed, and there's real concerns about their survival, and banks are clubbing together to try and provide a way out for them, because their demise would be much more damaging for the derivatives markets than Lehman.
Really, it's quite unprecedented in our times. I mean, market experts and people who've seen these events before believe what we're seeing now is worse than the 1987 crash, worse than 9/11, worse than the Asian crisis, and worse than the unwinding of the tech bubble. You need to remember these giant Wall Street firms survived all those events. They haven't survived this. It's an amazing period.
In the past 14 months, the subprime credit crunch has moved relentlessly on Wall Street, taking out its first casualty, global investment bank Bear Stearns, in March. Then, just last month, the US housing collapse caused a run on regional banks, forcing the US government into a $5 trillion bailout of its 2 mortgage lending giants, Freddie Mac and Fannie Mae.
We're going to let about 10 people at a time. As soon as one comes out, we'll let another customer in.
So it seems like we're just watching domino after domino after domino take each other out because they're all interrelated. The problem is now counterparty risk. Everyone's scared of dealing with everyone. They're worried that if I deal with you, that you won't settle with me, that you have no money. That's the problem.
With the crash of the financial market, massive job losses in the industry are inevitable, along with huge cuts to investment bankers' multi-million-dollar salary packages. For the young masters of the universe who dominate the industry and have only ever known the boom time, stockbroker Charlie Aitken says adjusting to the new financial landscape may prove the biggest shock of all.
Financial service investment banks will have to slash their workforces, get their cost bases down aggressively. Unfortunately, in investment banking, that's a bit last in, first out If you're the young graduate that just got employed, you will probably be the first one let go, unfortunately, and that's how it'll work. I think the days of high-end investment bankers earning basketball money are well behind us. Those days are in the past.
Local analysts say, such as the scale of the losses, Australia can no longer delude itself. It will somehow be cushioned from the credit squeeze by the resources boom and our relationship to China.
I think that international lack of confidence is everywhere at the moment. The financial sectors of share markets have taken the major brunt of the fall. I think the Australian financial sector is down about 40%. Indexed from the peak, and I think obviously the US one's down a lot further than that, UK one down a lot further. So it's a global thing.
The level that it's got to now in America and Europe is so bad that there's no way that it can't affect us. And our banks will continue to have to provide against bad loans. Their cost of funding will be high, and it's going to be quite an unattractive period.
But the events of the past 24 hours may have an upside. It's now widely expected the Reserve Bank of Australia will have little choice but to follow the lead of other first world countries and slash interest rates.
But with financial conditions tightening and confidence obviously going to be affected by these developments, the first few rate cuts I think are very, very likely to occur, and possibly 2 before Christmas.
Deborah Cornwall with that report, and that's the program for tonight. We'll be back at the same time.